3. Oil rally. The major driver in share markets last night was a rally in oil prices, following news that supply disruptions would likely outweigh the effects of a Saudi-led boost in production. The story was underpinned by news that the U.S. State Department is demanding buyers cut Iranian imports, in line with sanctions imposed upon the country by the Trump administration. The energy sector added over 1% in U.S. trading after the news, with similar gains tipped for local shares this morning. Brent crude is now trading above the $76 handle, and raises questions leading into the release of crude oil inventory data tonight about whether oil prices may be preparing for another push towards $80 a barrel. 4. ASX. The ASX 200 has proven remarkably stoic recently, holding on to territory even despite rising global economic and geopolitical risks. The index managed to staunch early losses yesterday, to close only -0.2% lower for the session, courtesy of another CBL-led run higher in bank stocks. Predictably, mineral and IT stocks struggled, the former because of the impact tariffs may have on global economic growth, the latter because of heightened rhetoric from the Trump administration about protecting the U.S. IT sector. Utilities and consumer stocks pushed higher, thanks to a defensive play into non-cyclical stocks, suggesting that while risks remain high, investors aren't willing to give up on the prospects of the ASX just yet. 5. The day ahead. SPI futures are pointing to a generally flat open this morning, reflecting the dampened mood in markets at present. Local economic data is practically non-existent, and will be for the rest of the week, meaning global themes will probably be the impetus for any major moves in Aussie shares. Having bravely weathered a barrage of bad news over the last several weeks, one must question how far the ASX can go off the back of this recent run. One possible answer could be built into the technical data, which reveals upward trend line resistance could exist, currently, around 6,290. Although a push here does seem ambitious, when considering the ASX 200's recent stubbornness, perhaps a run towards the 6,300 level wouldn't be too fanciful. 6. Asian indices. Looking across Asian indices in yesterday's trading, share markets were mixed. Like Australian shares, data has been light and low impact, with trade war anxiety stuck at the fore. The trading dynamic has perpetuated the downtrend in Asian markets, sending the likes of the HIS tumbling through support levels with quite limited pushback. The Nikkei has fought harder against the tide, supported by soft inflation figures yesterday, recovering some ground to pick a battle with the index's 100-day exponential moving average. Finally, China's CSI 300 index has tumbled 0.9%, extending this month's losses to approximately 7.54%. 7. Chinese bear market. The sell-off in Chinese shares officially places the market in bear territory. The Shanghai Composite Index has now fallen 20% since the start of the year, as trade tensions along with potentially slower domestic growth weigh on investor sentiment. The index has now given up its last 12 months of gains, taking it to within a whisker of the 2,800 mark. The yuan is also being driven lower, predominantly due to intervention by Chinese authorities in financial markets, and fears of trade wars with the U.S. Memories of mid-2015 are entering the minds of market participants, when concerns surrounding financial stability caused Chinese shares to shed half their value in the space of 3 months. It would be premature to conclude that this bear market could see a repeat of that situation. However, for Australian traders, it's a context worth considering as the story unfolds. 8. Market Watch. SPI futures down 16 points or 0.3% to 6,136 at 7:30 a.m. AEST. AUD minus 0.3% to 73.89 US cents. Overnight low 73.80 on Wall Street. Dow 0.1%.